All right, hey, welcome everyone. Welcome to the trade findings and adjustments for the 7th of September. It's Thursday morning. I'm going to go over today the bull call, and I would suggest that you head off to get your preview, right? Head off to www.myhurleyinvestment.com and the commentary for 9/5 talks about our awesome meta bull call trade most of us are currently in. So if you want an understanding of that, that's where you're going to go. But today we're going to talk about, so I'm going to say, let's talk about the bull call strategy. And obviously it's going to be bullish trend. So the first rule of thumb, right? The trend is your friend. If you forget that the trend is your friend and you're putting bullish trades on bearish positions, you are not going to be making money, right? That's common sense. If you're putting a bullish trade, a trade that's expecting the price of the stock to go up, on a bearish moving stock, a stock price that is falling, you are not going to make money. But the trend is your friend. First thing to remember. Second, I'm underlined. How did I underline me? That's unique. Second, we want to capture a portion of the upward, that's bullish, movement without having to buy the stock and have a huge, in comparison, capital payment, right? Another way to say it is without having to purchase the stock, which is expensive, right? We're trying to find a cheaper way of capturing a portion of the upward movement without spending a large amount of money for purchasing the stock. And then third, we want a hedge in case we are wrong on future movement of the stock. And one other thing, the trend is your friend. I would also say check the indexes as well. Again, if you go to the myhurleyinvestment.com, listen to the commentary from Tuesday, the 5th, I explain our meta bull call. It's a profitable position for us. It's more profitable today. We are really excited on where we're at. Someone just said, this site can't be reached. My Hurley, H-U-R, My Hurley Investment. And I am pretty sure that site can be reached. myhurleyinvestment.com. There you go. It's the money, the $150 and $20 tied in a knot, tied in the rope, tied up with inflation. So my Hurley, H-U-R, it's my last name there, Lee, myhurleyinvestment.com. This is where I have all of the webinars if you miss them, where we're at. This is for you guys to give you guys information. But okay, here we go. So we're going to talk about the bull call strategy. It is an option trade. So I should just go ahead and I should say this right here. Fourth, options are not dangerous, scary, or foolish if you know what you are doing. And this trade findings and adjustments was more for you guys to look at trades that you could place on your own if you wanted to. Occasionally we have trades that are running that are these option strategies that we use them as a less expensive way to enter a trade and not to have a huge capital outlay where you have to buy the stock. But the bull call strategy, the thought process is a bullish trending stock. I picked one up, which I thought was kind of interesting, was shown to me, Walmart. Walmart shows a great bullish trending stock. I also like Meta. If you were to pull these two out, you're going to see a nice trending movement on some stocks here. These are the type of movements that we're looking for, primarily between Meta and Walmart. Meta has a better setup as it is at the bottom of this blue trend line. The expectation, and I'll get a highlighter here, the expectation is that Meta, get my highlighter, Meta will be on this trend line and bounce back up to the upper trend line. I mentioned Walmart. Walmart was brought to me by an individual. I like Walmart's upward movement. The problem with Walmart right now is it's almost at its upper trend line, so it'll probably come down and then bounce higher. So Walmart right now does not necessarily have the setup that I would use for a bull call. But for those of you that are a little bit new, the thought process is a bullish trending stock. The long call is the profit-making part of the trade. And the long call is the right to buy a stock at a certain price for a certain period of time. You are paying for that opportunity to purchase the right to buy a stock. Anytime you buy a stock, usually your expectation should be that it's going to gain in value, that it's going to go up. Time is our friend. We usually place this trade 90 days out in time. The short call or the short position is the hedge. This is the, hey, what if we're wrong? If we're wrong, we want to make we want to not risk everything we paid for the profit position. We want to get a credit in. We want to make our trade cheaper. So the short call, again, is sell a stock at a certain price for a certain period of time. These are two basic positions, I guess option positions that give us the ability to have the opportunity to make some money on movement in our stocks without having to buy the stock outright. So I'm going to show you one on Meta that I might do or run that gives me the ability to say, hey, we have this opportunity. We want to take advantage of it. How might we set this up? How might we run this position? And let's see if I can't get us into a paper trading account. Give me a quick second. I'm trying to figure it out. There we go. Well, no paper trading account. All right. So here we go. I'm going to use the two examples. So let's first look at Meta, which is Facebook, right? If I was going to look at Meta, I like the movement. It has an upward moving trend. We got a little bit of news that they're going to have to follow some new regulations. It's sitting right on its 50. Is it primed to bounce higher or lower? We don't know. But we do know that it's traded as high as 326, 318. It's just below the 50-day, but sitting at a pivot point. Our expectation is that the news out of Europe and how they're going to make regulations a little tighter on some of these big corporations will pass over. And for all we know, Meta could already be in compliance with the new English, I guess that's not fair, the new European rules through the euro, that's whatever they're called, the group of companies over there in Europe, right? Group of countries, can't speak today. So our expectation is it's going to go higher. If I was looking to set up a trade, I will erase the drawings. I would be looking for, come on. Well, maybe I don't have it up and going. Maybe I've got too much going on here. Give me a second here. We're having a couple technical difficulties. Are you guys still able to hear me? Can we just do a quick check for audio? Making sure you guys can hear me. Says I've got the internet. Gotcha, thank you, Bill. Internet's just running a little smooth. All right, so I would be looking at Meta. It's taking forever to get loaded. Why is it unresponsive? Give me a second. I'm just going to go into this all over again. See what's going on here. All right. Now we're moving again. It's loading meta. So the thought process is, I think the stock's going to go higher. And I'm going to be cheap. I'm going to go out of the money. I'm going to want the right to buy it at 300. And I know it's gotten up as high as 318 and 326. So my expectations are, you know what? Maybe I'm only going to go to 315. I'm not going to be too greedy. I'm going to see about building some kind of trade here that allows me to make some money. So if I was looking at something right here, again, I'm going to go meta. Make it a little bit so you guys can see. I could buy one call. I would make the expiration out to September, October, November, December. I might go out to this price. It's loading, it's taking a little while. Strike price, I want to do it up at 300. I want to be cheap. Let's see if I can add another leg. Let's do a call vertical. Buy to open the first one. Expiration again is going to be in December. November 15th. Going to do a 300. Going to do a 315. There we go. So it looks like I may spend $23. I'll take a credit in of $17.40. So really the midpoint looks like 625. So let's diagram this out. I'm going to do a meta 300, 315 bull call expiring in December 15th of 2023. I'm going to buy to open the 300 long call. I'm going to sell to open the 315 short call. Net debit is $6.25. Now that's for one contract, so you times that by 100, right? One contract is going to cost me $625. Maximum profit, do such a good job of spelling here. Maximum profit is the difference between buying at 300 and I've got the right to sell at 315. So the maximum profit is the $15 difference in the two buy and selling positions minus my debit of $6.25 gives me what, $9, $8.75 or $875 profit. I like this one because if you go ahead and take a look at it, 875 divided by 625 is 140% return on investment, or 1.4 rewards for one risk. I like it. It's a good trade to be in. I like seeing where we're at, and I like the ability to have, how would I say it, a cash flowing or a fundamentally sound company that can make more money in the future. Now, Walmart is in the bullish trend, but at the top of the channel. So let's take a look at Walmart really quickly. It's moving bullish. It's in a good position. You could also say you're buying Walmart here because of the opportunity to make more money in the Christmas season, the Christmas rally, when retail companies really take off. The problem is it's already up at that high side. So what do? If it's already up at that high end, and I'm going to ask you guys a question, what do you do about Walmart? What do you do about placing this trade? What do you do? There are a couple different answers, and yes, I know one of them. Put the trade on. Could be. Yes, you could put the trade on and hope that technicals don't work the way that they're supposed to. Right, it's a bull call. What do you do about Walmart? It's at the top, again, I just showed you guys, it's at the top of its range, right? It's in the top of its channel. Doesn't mean it can't break out higher, but we are going to, I don't know, we are going to a bad month of the year, right? You could play Christmas, right? There's a good idea. You could wait to put the trade on until it gets back to the bottom of the channel. I agree. Lee says, Lee's really gambling here. Lee says, put just the long call on without the short. So Lee's like, you know what? Let the dice roll. We're going to gamble without upside protection if we're wrong. There we go. So Jim Kohler says create a poor man's collar. Use the put for downside protection. I love all of these. You know what my answer would be? Place the trade, but have cash available for dollar cost averaging twice. So if I have 5 grand, I'm only going to want to spend 1,500 of it. I'm only going to want to spend 1,500 of it. So if I was looking at this, I might change this a little bit different. Come on. What is wrong with Money Block today? This is awful. Oh, part of me wants to go to my older version of it. Okay, if I'm looking at Walmart, right? I want to do a call vertical. Walmart's up today, bucking the market. Still going to go out to December. Probably looking for something like, boy, a 62.50. Might just be my internet. My internet today might be slow. Nope, I only got a 65. Let's do little price comparisons here. Wow, 250. So that's interesting. It's going to cost me about $2.50. I wonder if we did an in the money one, switched to just a little bit 160, 165. This will probably be more expensive. Yeah, this one would cost $325 to try to make 175. Interesting. So if we did a 160, 165 with Walmart trading at 163, it'll cost roughly $375 to make 125, right? I do that right? Let's take a quick peek. 325 to make 175. So this is in the money bull call. The right to buy it at 160, to sell it at 165. That fits within the trend channel. What I don't like is, if I get my calculator, 175 divided by 325. It's one risk for 0.53 rewards. I don't like it. I would be more for an out of the money bull call where we have the right to buy it at 165. We'll be obligated to sell it at 170 for Walmart at $163 currently. The debit is $250. The maximum reward is $250. A 1-to-1 risk to reward ratio. cheaper than the in the money 325 one. And again, if I had, let's say if I had $250,000, right? Let's do this one. If I had $2,500, I would place 3 contracts, expecting the stock Walmart to fall to the bottom of the trend channel. For those of you who don't know what a trend channel is, it's just the movement of the stock. We've got Walmart right here. The bottom of the trend channel might be at about 157, 158, 159. So I place, you're expecting the stock to fall on the channel, and that's somewhere in that 159 to 157 range. Then I would add 3 more contracts to dollar cost average, and they should be cheaper than $250 for the total contract. Expecting that bounce back up to the 165 range. And I would still have cash for 4 more contracts if we guessed wrong. If we guessed wrong and it goes back down to 155, where it has all that support through June and July. Again, if I guessed wrong at 155, I would add 4 more contracts. And then stop dollar cost averaging, because I don't want to throw good money at bad. It's pretty interesting. A lot of places talk to you about, oh, 10 contracts, you maximize commissions. But they don't talk about the cost of adjusting, the cost of what if you're wrong, the cost of, uh-oh, if there's a problem, what do I do? Do I go buy a long put to act as protection? So this is what diagramming out the trade looks like. This is what looking at all your options look like. When you receive trade notifications from newsletters and stuff, this is the work you should be doing, because chances are they haven't done any of this. And this is where you're looking to make sure that you are doing those things to ensure your best opportunity to really guess correctly. But if you're looking for a couple trades, these are the 2 that I would be in. These are the 2 that I'd be looking at to capitalize on a down September, looking to see a rebound for a Christmas rally, and looking to have a top and a bottom position, where remember is that stock falls in price, your long position loses money, but your short position gains money. So it offsets the downward movement. Are there any questions for me? For those of you that are traders looking for trades, are there any questions for me that I can answer for you guys? And I'm going to wait here a minute just to make sure that we're all on the same page. Any questions for me? Bill, what do you think? Bill was the one that was kind enough to take a look at Walmart. And what's my expected time frame to be in the trade? In all honesty, I have it out to the middle of December, and my expected time frame to be in this trade would probably be getting out the middle of November or on Black Friday, right? The Monday, or is it Black Monday? Black Monday, the Monday after Thanksgiving. No, it's Black Friday. The Friday after Thanksgiving, when everyone hits the store for all their purchase of cheap toys, that's where I would be going on, trying to get out of it around then, or trying to get out of this for me when the stock was closer to 170. Kevin, are you not going to take a percentage return, take 20%? No, I'm playing the movement of the stock. So I would be looking to get out with Walmart closer to 170, maybe even 169. And my time frame is that might not happen until the Friday after Thanksgiving on Black Friday. So I'd plan on being in this trade from now until November 26. Good question, Abraham. Or I should say, or until Walmart gets up to 169, 170, then I'm pulling the trigger for a nice return. Any other questions? Good question. All right, I don't see any other questions coming in. Guys, I hope this was helpful. I will have Dave get this, Dave Westlake get this posted maybe later on this evening, or I'll get it posted myself. Maybe I'll have Keeb get it posted. But kind of stalling here to see if any other questions come in. All right, guys. Talk to you later. Stuart, I'm going to give you a call as soon as I'm done with this. Thank you for your attendance today. And I look forward to seeing you guys again next Monday for the commentary. Bye-bye. Are we both just working